Good evening. This is Peter Reznicek from Weekly Options Advisory. Today we had a large break to the downside, and the question on everybody's mind is probably whether or not this was indeed the quote-unquote crash of 23 or the start of something larger to the downside. I am leaning towards the opposite here, whereas I don't think so. The first reason is the simple fact that this entire move that we saw this afternoon happened on no news. And that is important to note because if the market is going to continue lower and really change trajectory, then what it needs is some sort of news catalyst that is systemic to the market, meaning it affects everything and it will make all investors and traders change their mind about their bias. We didn't have that today. This move was on no news, and it was probably due to some DTE0 shenanigans. Remember, when there is huge volume in DTE0 options on one side or the other, it can spur huge program trading, if you will, in the futures by market makers, which tends to sort of feed on itself, and you get these moves down. This happens. We've seen this happening more and more in terms of intraday volatility due to the advent of DTE0 options and the immense amount of institutional players that are using them to juice their returns. So that being said, we also were coming into this session with a good amount of poor structure that I think exacerbated this. Look at these virgin points of control. That's VPOC from 1211. That's 1212. That's 2, 1213, 3 in a row. Here is 1215, 4, and here is 1218. We had 5 virgin points of control stacked up below us coming into this session. And as we know, those of you who are students of market profile theory, you know that 5 is kind of the number where we start to take notice, where the odds of a liquidation break tend to increase when you have 5 virgin points of control below you. It can get bigger. I've seen as many as 7 and 8 virgin points of control, but essentially it is something to pay attention to. Obviously, it does not tell you exactly when this break is going to occur. It just tells you that the odds of some sort of a break occurring have increased a little bit. Now, that being said, we didn't clean up all of the poor structure below us. You notice we've still got virgin points of control here. We've got a single print section here. We have a short single print section here. It just cleaned up some of it, and it took out the lows of 2 sessions here, which is kind of noteworthy. Now, where things really get more interesting is on the technical level. Is if we look at the daily on the SPX and the NDX, I am keeping a very, very close eye on the fact that we came down just below the 8 EMA. I wouldn't say it's a definitive break, but it is a little bit below. And then on the NASDAQ side of things, we didn't yet lose that. So I would have to see both of these indices print daily bars below the 8 EMA, which would make me change my tone a little bit at least. But overall, you can see it's still pretty bullish. There's no major trend change here. And unless we see otherwise, which would mean, and when I say otherwise, I mean further weakness into the end of the week, we should assume that it is just a liquidation break and the market can indeed move higher. Remember that if buyers come back into this market, liquidation breaks like we saw today, they strengthen the market, not weaken it. They actually strengthen the market, and that's an important thing to note. They strengthen the market because they take potential sellers out. All right. And they also probably bring in some weak-handed sellers who are late to the party who may have been shorting this market at the end of today. All right. Last but not least, I want to just quickly go through the top 4 sectors in the S&P that make up the S&P, just so you can see where these top 4 are in relation to those 8 EMAs. So the technology actually broke through, and I'm not surprised really, because I think it has a little more beta than the others, and it can tend to be a little more wild. So it did come through. The next one is XLV, which is healthcare. Now that is way below the 8. That's definitely weak. So we'll be watching to see if that has a trend line break. The third one is financials. Also broke down below the 8, still a very bullish pattern. And last but not least, consumer discretionary, which looks good here, did not lose the 8. So you have some that are a little bit below, some that are a little bit above. Not that definitive of a read from the sectors, but keep this in mind. As the market moves, you always want to be watching, at the very least, if you can't watch all 11 sectors, at least watch these top 4 to give you an idea of where the market may or may not be going in the future. All right. So that's all for this video. Be careful out there. Do not assume that this has to be a break lower just because you see this one ugly red candle, because as I was saying, firstly, happening on no news, and secondly, very, very overbought market that was due for a break, and three, you did have a good amount of poor structure, especially as shown in that market profile below us, and that structure needed to be repaired. Remember, the virgin point of control is simply where the market does not return to an area of high volume to sort of tag up before going higher. So it leaves the high volume area in its wake, and when it starts to do too many of those, it can increase the odds of such a break happening as we saw today. Hey, this is Peter from ShadowTrader.net, and I just wanted to thank you for watching this video. If you enjoyed this content, please hit the like and subscribe buttons, and if you'd like to trade live with me every day in my weekly options advisory, then check out the link in the description below. I wish you good trading, and I'll see you in the room.